Hi, Tim Biggam for Delta Derivatives, Option Hedges and Edges, taking a look at a market that apparently needs no downside hedge here as we continue to power to fresh new highs here on the back of more expected easy money coming out of certainly China, given the coronavirus fears, and perhaps the Fed. We have Fed Chairman Powell speaking right now. They've already kind of priced in a one rate cut. We'll see if it's two, which would certainly maybe give even more fuel to stocks here, but stocks that have been fueled higher certainly are the NASDAQ names, what I'm calling the MAGA stocks. We have Microsoft, Apple, Google, and Amazon. All four of these over $1 trillion. The four combined comprise more than 40% of the triple Q, the NASDAQ 100 weighting. So things are getting very extreme, especially on Microsoft. We're looking at a stock that, if you look at the chart pattern, is reminiscent also almost of a marijuana stock here with that parabolic up move. Certainly earnings were superb, but the stock reaction, I think, getting a little bit overextended. It is the most overbought it's been in the past year on virtually every technical metric. We're also looking at price to sales and PE ratios at 10-year highs. This is for the largest market cap stock in the U.S., so it's tough to grow as you get bigger. I think the stock has gotten over its skis a little bit here. Interesting enough, implied volatility is creeping up. It's at the 80th percentile, even post-earnings, and with the stock at the highs, normally you'd expect implied volatility to come down. More importantly, calls versus puts, that skew, which normally favors the puts carrying a higher IV than the calls, has virtually flattened here, so I'm taking advantage of that, selling an out-of-the-money call spread going out to March with the stock, at that kind of high to mid 180 range. I'm looking at selling the 200 205 call spread, bringing in over $1 here, so I like that risk-return trade-off. Gives me a nice upside cushion. Really not looking for Microsoft even to pull back, but that red-hot rally to stall out. Otherwise, we're finally seeing oil pick up here today. It had flipped from backwardation in late January to steep contango today as slow growth again is the fears. And that's really the trade-off here. Certainly growth will slow. The GDP numbers down by about 1 full point here, yet stocks are continuing to head higher simply because they expect that free money. So Chairman Powell better deliver, or else stocks may have a pullback on the horizon. So until next time, as always, here's the good trading. Take care.